didn't really follow through, and we've seen quite a big...
Hello and welcome to this special coverage of Q4 with BQ. NMDC is up for third consecutive session after the company has reported fourth quarter earning that has met street estimates. To discuss the quarter gone by and the prospects for the company going ahead, we are joined by the CMD of the company, N. Bajendra Kumar. Hello and welcome to Bloomberg Quint, sir. The first question that I have for you is that the company has reported in line with estimates number. What kind of volume growth can be expected in 2019, given that in 2018 we've seen a 4.5% volume growth?
See, we have, if you compare it with the last year, we have an increase of 5% production as far as volume is concerned. We have gone up to 35.5 million ton from 34.1 million ton. So that's about 5% increase as far as volume is concerned. Next financial year, we are targeting around 39 million ton of production.
Sure. How about your sales volume trend? What growth can be expected for FY19?
That is, sales is around 36.8 million ton. This is also 1% increase from last financial year. That was 35.662 million ton. So this has also increased this year.
Just to understand the growth number, you think a 7% growth is possible for FY19, given that we saw a 4 to 5% growth rate in FY18?
As far as volume is concerned, we can expect that.
All right, talking a little bit about your EBITDA per ton in that case, which stood around 1,800 rupees at the exit of Q4. What can be expected for FY19?
See, EBITDA this year is around 56%. So compared to last year, it is 51%. The EBITDA per ton for this financial year is around 1,800 rupees. We expect that next year also we will be around 5% increase or something. That's what we are generally, calculating right now.
Sure. Talking about realization per ton growth, which was up as much as 25% year-on-year basis at around 3,688 in Q4. What growth can be expected for FY19 in that case?
We expect a better realization in this FY19 also. And as you have mentioned, the iron ore pricing has been a little stabilized right now. So we expect around 1,200 and 12,500 crore of growth turnover next year.
Sure. If you could explain the rationale behind the full year turnover number.
Yes, this year it is around 11,615 crore. That is around 35% up turnover. So we expect another, at least 1,000 crore to increase.
Right, Mr. Kumar, what explains the flattest margin, EBITDA margin that we've seen sequentially at around 49%? How sustainable are these margins going forward in FY19?
We have a little bit dip on the side, and we expect that profit before tax will be around 6,175. This year we have about 44% increase. We expect the same level to be continued next year also. And we don't think any serious issues on our profits are concerned.
Sure. If you could talk a little bit about your iron ore prices, how do you foresee them for FY19?
See, the FY19 also, the steel production is increasing, and we expect that our iron ore, production as well as sales are also going into the positive direction. It will get stabilized. That is what we expect. There will be pressure on various issues, especially on the pricing issues, because the Orissa iron ore scenario will be a little bit, volumes will increase. So that will have an impact on our internal pricing also. But we expect that the next financial year will also be good for us.
All right, by good, do you mean if you could just give us a range in that case, what can be estimated on the lower side or in the bullish case scenario for FY19?
See, that cannot be speculation. That cannot. I cannot speculate. It depends on the market prices, the Odisha prices, the other aspects and internal issues, policies, and how the steel sector is functioning. So we expect it will be better than this year. That's what I feel. That because steel is getting stabilized, so we expect it could be a better situation next financial year.
Sure, I'd like to understand a little bit about your profitability rationale behind a 25% sequential dump that we've seen in your profits, which seem to be a little missed from what the street was estimating.
The volumes have increased quite a bit. The last quarter has been bad because of transport issues and issues related to evacuation. So we couldn't do better the last quarter. So this quarter we have done extremely well. So that's a jump. There is a serious motivation at the level of the field also that we should exceed the targets fixed for last financial year. So they have achieved it. It has an overall effort by our employees and our, this being our Diamond Jubilee year, people were really worked up, and then they have taken initiative at their field level also, at their own level also to have more production, more evacuation, more sale. So this is a good sign. This quarter jump is basically due to compensating the loss of quarter 3.
Sure. In that case, the last question that I have will pertain to your evacuation charges. Are we done past the hike that Coal India has undertaken, and what's the status on that currently?
This is basically a government policy issue. We have been taking up with evacuation issues and their rates and duties and other things with the government of India, but the taxes and duties and freight charges, etc., are there. That they are reality. So we will work out the present situation. If it's possible to change it in our favor, that's an advantage to us.
All right, Mr. Kumar, thank you so much for taking the time out for us. It was a pleasure talking to you. That was NMDC. Let's now shift focus to Mercator, and Sumit Sarkar is here to introduce the management. Sumit.
Well, thank you, Nikki. So it was a weak quarter for Mercator in the fourth quarter of financial year 2018, with revenues declining while its net loss widening. Let's discuss the quarter gone by with Mr. Shailesh Mittal, the CEO of the company. So, Mr. Mittal, in the fourth quarter, if you see, your revenues were down, but on the EBIT level, the performance was much better compared to the last year. What were the factors that led to this in the fourth quarter of financial year 2018?
Made a lot of changes over this year consciously. The idea has been to start getting into high margin businesses. So even if you see dredging, we focus on contracts which were high margins. And similarly, coal prices were of course high. Of course, we lost a lot of revenue because of the disruption of 4-5 months. But the margins of the coal business were higher than last year because of the coal prices and commodity prices high.
So you're expecting the commercial production of the oil fields to start in the second quarter. How much incremental revenue will the company get from this?
See, oil will eventually become our largest pool of EBITDA, revenue and EBITDA by 2020. So what will happen is that we expect to start production in the second quarter. We expect to get the mining lease sometime in June, and post which we can start the production. The scaling up of the business will happen by, say, November, December, where we'll achieve a much higher production level of more than 5,000 barrels a day. So the full effect of the oil will come in 2020. Having said that, we expect oil to contribute significantly to the revenue and EBITDA next year, in March 19 as well.
And when it comes to the dredging business, what is your outlook on that business?
So dredging, dredging has a lot of potential. Now, there has been a lot of new contracts being talked about, and some of them have come in the pipeline in terms of tenders. Now, being a tendered business, there's always a delay which can happen in terms of when the tenders come out, when they finally open and get awarded. But if you look at the potential of the business, we're looking at substantially higher market size in the coming years. owing to the fact that inland waterways is opening up, and the government also is very focused on deepening the current ports, and so that will lead to higher, bigger contracts in dredging, both in terms of maintenance dredging as well as for inland waterways. So the outlook is positive. We are also trying to diversify ourselves geographically as well, looking at other Asian countries. So for us, we feel the outlook for dredging would be good. The market forces are buoyant. The government spending on the sector is very, very high, both in terms of national and state level. So we do expect our market share of the market to go up, as well as dredging contributing much more than it did in March 18 numbers.
And by when are you expecting the demerger of the dredging business to complete?
Demerger should happen by the end of the year. That's as per the plan, and the official date was October. Of course, these processes are also governed by, processed by the exchanges and the courts. So, but as of now, we expect it to happen by end of this year, calendar year.
So in the coal business, what is your outlook for the coal prices for financial year 2019 and financial year 2020?
Yes, I think the feedback we have from our customers when we talk to traders and customers, not just in India, but China, Vietnam, Thailand, Malaysia, the demand for coal seems to be very, very buoyant. And I think we expect the firmness in coal prices to continue this year. Of course, oil prices being high also helps all commodity prices and the fuel prices, coal being one of them. So we do expect, going by the feel we have on the ground for demand for coal, as well as not only just India, internationally, as well as the overall pricing scenario around the oil, that coal should be at reasonably firm levels.
And do you expect your margins from the coal business to remain high at high levels going forward?
So actually, we are doing a couple of initiatives in the coal business. We plan to increase the production as well as move to higher quality coal. So our mines, we have two quality of coals. So idea is to move the production towards a high quality coal where cost remains same and the margins are higher. That should again happen in the next 2 quarters or so. And post which we believe that this year the margins will be better than the last financial year, which is March 18.
So when it comes to your shipping business now, you have been selling your assets to make your fleet younger. Any more ships that you intend to sell in financial year 2019?
No, FY19 we don't expect to sell any ships. Most of the ships have sufficient life to run through this year. We also don't have any dry docks planned except for one VLCC dry dock. So idea here is that we believe shipping cycle is also turning up slowly. We've seen slight uptick in the market rates for some category of ships. The general sentiment is by the end of 2018, a lot of ships will get scrapped out internationally. So there should be an upturn in the cycle. So our plan to sell old ships which are near to scrap life, and eventually prepare ourselves to buy younger fleet in tune with the uptick in the cycle is what we're planning at. As of this year, we don't expect to sell any more ships.
So in FY18, your total debt has come down by around 6%. By how much further you intend to bring down your debt in financial year 2019 and going forward?
We should be able to do it, bring it down by another 10 to 15%. So what has happened is that the debt in shipping and dredging and coal businesses will go down, and maybe we'll have a slight uptake in the oil business since oil business is starting. But overall, at the consolidated level, we should be able to reduce it by another 10-15%. And a much significant debt reduction will happen in the following years with the full production of oil and the full cash flow coming to the company. As well as I said, our margins in coal, our EBITDA margins in coal should also go up. And that also will significantly help us to fasten the process of debt reduction by March 20.
Sir, lastly, to sum it up, what will be the major growth drivers for Mercator over the next 2 years?
See, oil is something which will definitely, become a big segment for us, right? From being currently zero, when the oil production starts and the scaling up happens, By 2020, March 2020, it will contribute, close to 35% of our EBITDA. And we are looking at it's a new segment from a revenue perspective, so it'll be a massive growth driver. At the same time, as I said, we are also focusing on coal ramp up of high margin coal, so that should also increase in terms of percentage. So in terms of revenue and EBITDA contributors, coal and oil will be the two largest. Oil will be the largest by March 20.
Thank you, sir. Thank you for speaking to Bloomberg Quint. With that, it's a wrap on this special edition of Q4 with BQ. Up next is Hot Money. Stay tuned to Bloomberg Quint.